The stock market has hit record numbers, as you know. The stock market reached yet another all-time in history.
Donald Trump has put us in a horrible situation. We do have enormous income inequality. And the one thing I agree on is we can make massive cuts in the $1.6 trillion in tax loopholes out there. And I would be going about eliminating Donald Trump's tax cuts for the wealthy. Donald Trump thinks Wall Street built America. Ordinary middle-class Americans build America.
How does the market respond to election years? Many argue it is more volatile. Others say there's no real trend. I read that on an article recently in one of the big financial news groups. I wanted to see for myself. I went through the data uncensored, looking at the S&P 500 scores on election days for the past 30 years. Welcome to Jacob's Point of View. Forget for a moment your partisan views and biases, please, especially for this election and at this time.
Disclaimer, please note this video is for entertainment purposes only and not to aid your false sense of being able to correctly and consistently time the market.
You may be good, but you ain't that good.
With that said, I went through the S&P 500 data from 1990 to 2019, looking at the 7 most recent U.S. presidential elections. The results may surprise you, but hopefully, and more importantly so, make sense to you after you see it for yourself. The average S&P 500 year-to-date return during this time frame of 1990 to 2019 is roughly 11%, which is up a few percentage points from the all-time averages. Of the last 7 presidential elections, 1 year prior to election day, to election day, only one was in the negative. I'll give you a moment to try to think back in history of when you think that may have been. End of the Bush era, baby. Overall, the year before a presidential election, it is more reserved, with an average rate of return of 2.7%. Even when you take into account the 2008 recession of negative 34%, it is still below average at 8.8%. Remember, during this time frame, the average is 11%. America and the world doesn't know the next direction America will be taking, and subsequently tends to trend more reserved. Looking at 1 week after the election, the market is down 4 of the last 7 times. 3 of the last 4 times it was marked with the introduction of a new president-elect. Coincidence? Maybe, maybe not actually. Looking at 1 month after the election, the market was down 3 of the last 7 elections. If you take out 2012's minimal 0.55% drop, both significant drops of 13.44 and 6.17 were both marked with a change in parties. At the end of December, the following year, after the new president has had a whole year in office, the market was up in all just but one case. But the trend has been that in cases where the same president is reelected to a second term, regardless of party line, the market has responded much better than it did the first time that they were elected to office. So now you may ask me, what are my takeaways? It is hard for me to see a significant increase from Trump's 26.26 increase after his first year. But if he wins, I expect,
Pending 2020 craziness carrying into 2021.
Please help us.
another increase, especially shown right after the election into the first quarter of the following year. If Biden wins, I expect there will be a market correction in the first few months, but by the end of his first year in office, it will be a positive year, though probably below the average 11% return during that time frame.
What are your thoughts?
What are your points of view?
At any rate, I hope you are at least entertained, and ciao.